I'm delighted to announce that we are going to be the first bank to launch sponsored access on RULEMATCH, which will enable our clients to utilize RULEMATCH's low execution trading venue built on Nasdaq technology, a highly institutional setup where clients can settle T+1, which also implies highest capital efficiency, all the things that we have been talking about.
Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital asset industry. I'm your host, Ian Simpson, and if you want to know what banks, hedge funds, brokers, and others are doing in the institutional space in crypto, this is the place for you. My guest today is Adam Retkes, digital asset analyst at Bank Frick. Bank Frick, for those who don't know, is one of the earliest and most active banks in crypto in the so-called Crypto Valley ecosystem, which includes Switzerland, but also Liechtenstein, where Bank Frick is based. Adam, welcome to RULEMATCH Spot On.
Thank you for inviting me.
So just to start with, Adam, a question that makes me curious, perhaps is also very interesting for our listeners and our viewers, thinking about Bank Frick as one of the earliest banks in the crypto scene in the so-called Crypto Valley. Already in 2018, almost 10 years ago now, can you tell us how many crypto clients do you have, or how many crypto companies have come through the doors at Bank Frick?
Frankly, it's quite difficult to even estimate, but I would say it's a four-digit area in terms of numbers, and many tens of thousands of potential clients or prospects have come through the door over the course of the last 10 years now, because Bank Frick started to engage in crypto services in 2015, and since then. A lot of clients have been onboarded, but we have a rigorous method to go through each and every one of the clients, and not all of them have made it through the onboarding process.
So you've gotten to know a lot of people. Not all of them have ended up as a client.
That's true. We have fully regulated blockchain bank in Liechtenstein, so we have certain duties.
Certain standards, which we'll talk about a little bit later. I imagine over the course of 10 years. The clientele has perhaps changed a little bit, from the early days. We know how the industry in general has developed. What kind of have you seen in the development of the client base, the different kinds of clients or potential clients coming through the door?
There has been definitely a shift which kind of moved in parallel with the infrastructure of the bank itself. So as I mentioned, Bank Frick started crypto services many years ago, but back then we were using the state-of-the-art technology of those times, which were not in enterprise-grade hardware security modules, geographically distributed. Now we have the full stack, but back then we used that time's technologies, and that it only. We were only able to service clients with basic custody needs and trading needs, and along the way we developed our infrastructure significantly, and with that it opened a lot of new doors, and many clients came with more and more sophisticated client needs, so we could offer them also staking services or better execution when it comes to trading, and now we have a fully redundant custody infrastructure also.
And going back to those early days, I remember some of those things and projects coming to Switzerland, Liechtenstein in general, ICO projects, small tech teams wanting to do big things, which was great. I imagine many of them came to Bank Frick for even bank accounts and things like that, kind of basic banking services, but for crypto companies. That whole kind of wave of ICOs, as we know, kind of faded out more or less. Now you have a maybe different kind of client base that is coming from the crypto industry. Can you just kind of give us big bucket wise what are kind of the client groups that you service now?
Absolutely. We have private clients, high net worth individuals, most of them. We have minor clients, we have brokers, we have exchanges, not to mention hedge funds. So Bankfreak has many business fields, but for us, it is important that we have blockchain banking, servicing crypto corporate clients and financial institutions. So we also have banks and securities companies as clients. On the other hand, we have funds and capital markets departments. So we have also hedge funds and algorithmic traders who like to keep their underlying crypto asset in safe custody at Bankfreak.
Mm-hmm. And so that we'll get to those funds in just a minute. So, but that tends to look like a shift towards more traditional. You mentioned banks, but then brokers and so on. So more kind of traditional financial firms over time starting to do more things. Would you say that the whole space has become more professional in that sense?
Absolutely. That's without question. It's as I mentioned, as technology evolved and safe custody and best execution venues popped up in the sector, so did our clients became more sophisticated in terms of services. So first we had like minor clients, where first we had a few companies who are engaging themselves in crypto but wanted to utilize fiat rails, which we had because we are a traditional private bank who pivoted into crypto as a crypto-friendly bank. But that also means that client needs evolved, and so did we. And right now, in the age of crypto trading, where you have literally the same palette of orders that you can submit to execute the crypto trade, it's not just a spot market order swap anymore. It's not just what some certain decentralized exchanges can provide. It's literally the same sophistication level as in traditional finance.
Mm-hmm. And I imagine, those going backwards now in time again to those early projects, they come with revolutionary ideas and yet still need some banking services. There must have been a bit of a clash in kind of vision or understanding of needs, even things like KYC or AML standards and compliance and so on and so forth. That's kind of like two worlds butting heads, so to say, isn't it?
It is. It definitely is. And that's why we are so lucky that the owner family of Bankfreak and the entire management stood behind the initiative to become a blockchain bank. Since 2018, we are servicing our clients with blockchain services, and that has been a journey. That was a decision to be made to invest time and effort and headcount into building up blockchain banking for the bank. And along the way, also the regulatory environment started to support the initiative itself. So Liechtenstein has the TGDFO initiative, and which became the Blockchain Act of Liechtenstein itself, regulating safe custody and regulating how the entire token ecosystem in Liechtenstein can be serviced. And that's also it entered into force like many years ago. So it kind of all worked together in a very, very fortunate path for us.
Mm-hmm. And knowing that Liechtenstein is a small country, that's quite a thing that you would come together and build an ecosystem and then have regulation that supports that. Of course, in a smaller environment, maybe sometimes it's easier to move quickly and be agile to develop regulation to support a new industry. Was Bankfreak engaged in providing education, consulting with people in the law and certain things like that, or more generally?
Absolutely. We have a very close relationship to the Financial Market Authority of Liechtenstein. Whenever a question arises, we can approach them and we can ask for a statement, and they are happy to provide that, to provide legal clarity on the Blockchain Act and its surrounding legal environment and laws in Liechtenstein. So it's fair to say that the entire financial sector of Liechtenstein, even though it's small, you cannot compare it to Switzerland, but still, you know the people there, which has its certain advantages. It opens a lot of doors to to clarify matters, to launch new products, and that's a huge benefit.
Mm-hmm. And then also internally at the bank, you have to, as a small bank, you have to build up the expertise and educate the people on the front line, but then other people internally. I imagine that was quite a process of education and everything from the top to the bottom.
Absolutely. So at the beginning, we are super lucky because we've already had the traditional finance guys in the company. So within the organization, there was a huge amount of knowledge already built from the traditional financial sector, which is extremely important if you want to provide blockchain services, because as we discussed, it's scary. The two worlds are merging with each other in terms of professional services, and then building up internal knowledge and kind of like a knowledge base for crypto and crypto services was a huge effort on the bank's side. So we utilized our brand as a Liechtenstein private bank to attract talent, to attract crypto native talent, and those were the first colleagues who arrived to the bank. Some of them you would even call as degens outside of the institutional crypto space, who were really enthusiastic about the entire blockchain space and introduced this world to the other colleagues. And then we managed to internalize that knowledge, document that knowledge, and most importantly, preserve it. Mm-hmm. So this is the most important factor of all, because if you have a few key people in the organization, like competence centers, you would say. If those people would leave the organization, that's the knowledge goes with them. Mm-hmm. So we managed to preserve knowledge and kind of extend it on the mass scale to the other colleagues. And also managed to merge some of those degens into the traditional financial world. I mean,
exactly. Education goes both ways.
That was rather
right?
the challenge, yes.
Yeah. Oh, that's quite interesting when you think about, as we say, the world's coming together. People may be starting out doing crypto by themselves in the garage or something like that, and then moving up and coming into a bank where, there's different standards, different ways of looking at things, and yet you can still do things. I suppose that's the interesting bit, that it's not immediately boring and terrible if you go to a bank like Bank Frick that has that open mind and wants to do things, right?
It's in the DNA of the bank, really, the entrepreneurial culture, because it started from the garage of the owner family back then, more than 25 years ago, and since then, this is where we are today, servicing clients from all regions and blockchain native companies also.
Let's just go down a little bit deeper, talking now about funds. You mentioned funds, crypto funds, hedge funds. Can you give us an idea what kind of different flavors and different things that you see, without mentioning any names particularly, but how is that particular segment developed in your client base and maybe across the industry more generally?
Absolutely. So we can categorize the funds clients or overall the funds themselves when it comes to crypto. So we have algorithmic funds, for example, who execute strategies solely based on algorithmic indicators, and they spot pricing trends, in the future, kind of as a feature, and invest accordingly. And then you have the funds who are going for the macro picture, the macroeconomical landscape for the future quarters. Be it certain crypto assets are being approved to launch an ETF with that underlying, or certain crypto assets might become reserve assets for certain countries, and that kind of fuels the price. Some funds are betting on that. We also have venture capital funds, on the landscape who invest in pre-launch tokens. So they have some sort of pre-launch agreement, and they cherry pick the best and most promising projects. So those are basically the major areas when it comes to funds.
And we've had some, even some of those algorithmic funds on the podcast, and we know some of them in the space. They tell their personal stories of, again, going from the garage to kind of the big leagues, or moving up in the table, heading towards the Premier League, so to say. Things have changed quite a bit, right? It used to be that in crypto you could quite easily play the arbitrage game across venues and do things like that. Now it's a lot different. Do you see some changes and developments even from what clients need from Bank Frick and how they're working and so on?
Absolutely. So how shall I put this more delicately? So clients over the course of the years became more demanding towards niche segments. So and they want to have the best spreads. They want to have the lowest execution latency that you can ever imagine on the market, and they want to have access to multiple cryptocurrencies outside of the top 50 or top 20. And these are the needs that kind of pushed us in a very positive way to develop our services to bring the most out of it. Mm-hmm. So we were happy to contribute to satisfy these more sophisticated client needs.
Mm-hmm. People have talked again on the podcast about history repeating itself. We've had some, shall I say, old timers from TradFi who talk about the days when everything was executed over the phone, and electronic trading wasn't even a thing. Then that came in, took over FX and equities. Crypto started very retail and now has become more and more professional, getting more complicated. It's hard to find alpha, right, in the world today, even for people who have been in the space for quite some time. So that puts pressure on the people they work with and their list of, as you say, demands, right?
Absolutely. It's difficult to find alpha today. Like that, you're totally right on that. What we can do is provide the tools for our clients to execute their strategies with highest efficiency. So be it capital efficiency, be it speed, be it safe custody. That's also a unique selling point, Mm-hmm. It makes a huge difference to have a segregated wallet at the blockchain bank versus having pooled assets on some of the major exchanges. And as you mentioned, the world is pushing forward as always. So does the whole industry, the entire industry, and that means liquidity is getting more fragmented. Now we have like 30 plus major crypto exchanges, and therefore crypto is getting scattered around. Of course, the major ones, everyone knows that they conduct most of the trading volume, but it doesn't mean that liquidity is not getting fragmented. So alongside the adoption rate of crypto, liquidity fragmentation is still there. Mm-hmm. So it's more difficult to find exchanges or trading venues with the lowest spreads and low execution latency.
And then crypto is global too, right? So the fragmentation happens globally all around the world, and that's
if you have US dollars right now. So this is
yeah.
this is where the problem arises of US dollar payments. Mm-hmm. So right now 44% of the world's trading activity is denominated and settled in US dollars, and 55% plus, even though it's diminishing, is the share of US dollar of global reserve currencies, or global reserves, monetary reserves. So that kind of inherently brings you to the fact that the US dollar is the vehicle to facilitate crypto payment. Even though we say some developments in Europe and also in emerging economies where de-dollarization is happening, and therefore crypto is getting more local. Yeah. So we will see that.
We'll get to that maybe in a further step. Of course, the current administration in Washington probably has some thoughts about how that will or will not develop, the de-dollarization side of things, obviously. Absolutely. But now coming a little bit more to the point, and here we get a little bit more personal between Bank Frick and RULEMATCH, but kind of to understand that, right? In traditional finance, if you were a hedge fund, even an algorithmic trading fund, especially doing things in market making, because I understand some funds employ really strategies that make them market makers in the market, but then they profit from that as well as a fund. Normally, if you were executing strategies like that, a fund like Millennium or Bridgewater or somebody like that, you would have Goldman Sachs, JP Morgan as your prime broker, and you would have all the services of their balance sheet and access to different trading venues. up until now in crypto, that hasn't really been a thing, right? So this is where Bank Frick is now taking a step forward, I understand.
Absolutely, and therefore I'm delighted to announce that we are going to be the first bank to launch sponsored access on RuleMatch, which will enable our clients to utilize RuleMatch's low execution trading venue built on Nasdaq technology, a highly institutional setup where clients can settle T+1, which also implies highest capital efficiency, all the things that we have been talking about in one service.
Mm-hmm. And that, so sponsored access, it's kind of an unsexy term, but basically means that you as the bank allow clients who, even though their institutions couldn't be direct participants on RuleMatch as a trading venue, they can still access the matching engine, the trading, and so on. But then they have Bank Frick standing with them to support on settlement and other things as well, right?
Exactly. So any Bank Frick client can apply for the access to RuleMatch's trading venue, which is a financial institution only. That means normally, if you are a bank or a securities company, you can directly access the venue. But if you're not a financial institution, you need to have a sponsoring participant, a sponsoring party, which in this case is Bank Frick, to access the venue. And since our clients are all are going through, like you mentioned, rigorous processes in terms of our onboarding process, all KYC and AML and source of wealth and source of funds checks, they have an easy path to access the trading venue.
And just breaking down what that means for them, or like benefiting the clients that you have, because of course they're not just starting out. They've been doing their strategies, doing things in the market up until now already, and yet now with this new service, this adds a new dimension to them. So when we talk about capital efficiency, when we talk about connectivity, liquidity, counterparty risk, kind of break that down for us, what this enables for them, or what this helps and enhances for them.
Let's go step by step. So you mentioned capital efficiency. Capital efficiency in this case, in this service, means that clients can trade T+0 and then settle T+1. In the meantime, they have enough time to pledge their net clearing obligation, the counterside of what they have traded the previous day, and deposited at Bank Frick. And we, as a bank, as a sponsoring participant of the client, we will facilitate the settlement of those clearing obligations, and that allows our clients to have some time and utilize their capital in the meantime. Not to mention the possibility to trade on RuleMatch with leverage, which also can amplifies the yields of the clients who trade on it, in case they are good traders.
Yeah, I mean, well, we would assume they're good traders if they're doing business.
I hope our clients are good traders.
Yeah, and to be fair, that's sort of built-in leverage, right? It's not that you as Bank Frick necessarily are putting a lot of capital out there to go 50x or whatever, like some people do, but it's because of the clearing margin that you have on RuleMatch. You only have to post a certain amount in order to trade. That protects against your obligations.
Exactly, and volatility.
Yes. Yeah.
Yes.
So that's it's leverage on spot without, shall we say, the same kind of risk that you might normally think of when you think about leverage, actually. And so that's capital efficiency. There is, and I'll let you explain it in your own words, but the end of the trading then brings clearing, which is not just you have to send everything that you traded. If you traded 1,000 times a day, you don't want to make 1,000 transactions, right?
Absolutely. So the all trading activities are cleared. So we only conduct one transaction, one settlement transaction at the end of the day, or more precisely T+1. So it kind of brings high efficiency, extremely good efficiency to trade settlement to settle the traders' assets. And that's just one part of the USPs of the service. You also mentioned other points like connectivity to the trading venue. So whatever type of client you are, you can be a not too tech-savvy, risk-averse family office, for example, who wants to have exposure in crypto, but don't have the necessary technical connections to a trading venue. There is the graphical user interface to use. Most traders are already familiar with the Nasdaq interface. Or if you're a highly sophisticated algorithmic trader or high-frequency trader, then you can have option A, a fixed connection, which is market standards. Everyone uses that as a technical connectivity messaging protocol. Or you can have H or ouch connection to the trading venue, and that will allow ultra-low execution latency, especially with co-location in the RuleMatch server room in the Zurich metropolitan area. So there, every microsecond counts, and this is what we are providing.
And yeah, down to 25 microseconds, that's pretty fast.
That's impressive.
Quite a bit faster than you would normally have. And that, you mentioned latency, and going back to what we talked about, funds doing market making, because making a market in this highly fragmented space is quite attractive if you have the know-how, if you have the tech background and the understanding of algorithms. You can do that. Of course, the technical infrastructure hasn't really been there, with everything being kind of in the cloud and distributed and so on and so forth. But with low latency, you can do even more with that kind of market making strategy, right?
Absolutely, and that contributes to liquidity, or the point of liquidity on the trading venue. Now you have some big names, institutional market makers who provide liquidity on the platform, but I'll let you.
Yeah, flow traders and others who have done that in traditional markets, and I think that's the interesting thing. That people hopefully understand from what is happening here. This is, Bank Frick offering sponsored access on RuleMatch is not quite as revolutionary sounding, so to say, as doing staking or something else that came out of the crypto tech scene before, and yet it is revolutionary in that it hasn't been done at all in the crypto space really up until now. And so it's kind of like the old has become new, something like that. It's kind of funny in one sense, isn't it?
Absolutely. It's all about how basic services evolved to the niche ones that we have today. You also mentioned staking. We're also providing staking. Like we have multiple validator as a service providers to do that. So that's a good point for redundancy. We have like 6 to 7 stakeable assets, and we only started with a handful of them. And this is how we evolve. Now we have staking solution built into the custody infrastructure of the bank, which is connected to the old legacy core banking system of any bank that can service crypto clients now. All of these services, all of these systems are now interconnected, and this is a level of
sophistication or integration. Yeah,
exactly.
Yeah.
It's amazing.
It's mind blowing, actually. If you think about bringing those two worlds together, the Lego blocks and building them together, it's not easy for sure.
It's not easy. That's true.
Just talking about you as a bank, and we talked about that before, like educating crypto companies about banking standards and going through the process even of onboarding at Bank Frick, then maybe Bank Frick learning from crypto companies how the technology works, so that knowledge sharing. But you as a bank haven't lowered standards in any way in offering these new services and access to this new asset class. When you have an opportunity to provide institutional clients access to a venue where everybody as direct participants on the venue are at the same level, at the same standards, that also adds a level of security, so to say, doesn't it?
Which comes really good for risk-averse clients, and this is the whole point of in your case. RULEMATCH is never a counterparty in any trade. So that implies sort of the mitigation, or rather the elimination of counterparty risk during trading. This is also a USP that not many trading venues can provide. Mm-hmm. And that's good for the institutional clients also, so they know that they cannot just that they can have their funds on segregated fiduciary accounts and segregated wallet addresses, and they cannot run into troubles like the exchange goes down, the exchange or the trading venue becomes insolvent and the funds are gone because they were pooled. These are all highly regulated and segregated wallets and accounts, and the structure, how the service has been structured, is tailor-made for institutionals. Therefore,
we have this phrase "walled garden." We talk about it sometimes with companies like Facebook and so on, where once everybody's in, they're kind of stuck and they're in this closed circle, closed group. Can be kind of a negative thing in some sense, but in this case, it's actually quite a positive, right? This closed circle of participants, and then sponsored clients from Bank Frick. Everybody in the same standard, in the same group, right?
Absolutely, huge USP.
Now, when we talked about U.S. dollar and the almighty dollar, so to say, this, as we talked about, it's a big thing globally. Lots of trading done in U.S. dollar. But when it comes to actual fiat and crypto, this has been a bit of a challenge over the years, right? I guess you've seen this at Bank Frick.
Not really the crypto to crypto or the crypto to fiat on and off ramp story, rather like US dollar payments globally. So as I mentioned, like most of the banks are now running on legacy core banking systems. We have been developing our core banking system to enable 23 hours, 7 days per week instant payments and instant settlement within Bank Frick's network, and it's our core banking system, and that enables US dollar settlement within the bank for all of our clients in an instant manner. If you want to top up your exchange account, and this exchange is a client of Bank Frick, you can top up your exchange account in US dollars instantly if you are a Bank Frick client. Problem comes when you want to send US dollar to anywhere else around the world, because US dollars have to go through the real-time gross settlement system of the United States. And this is where the problems start. And there are only a handful of correspondent banks serving crypto-related retail US dollar transactions. So it's not a problem for banks' treasuries. It's only a problem for banks' retail clients interested in crypto or conducting crypto operations themselves, because they are not really reluctant on servicing those clients. And this is not just a European problem. This is a worldwide problem. And US dollar, as I mentioned, is still dominant in crypto trading, but we see other trends, other patterns also emerging.
Yeah, that's going to be interesting to see going forward if dollar dominance drops or if it continues. I mean, as you mentioned, there's just a handful of banks in the U.S., kind of almost systemically relevant banks for crypto with U.S. payments. Does Bank Frick think of itself as a systemically relevant bank in the crypto scene, at least in Europe?
I would like to imagine Bank Frick is one of those pioneer banks. Exactly. So we, as I mentioned, we have a lot of clients, a lot of exchanges and brokers and funds. The bank itself has more than $2 billion worth of crypto assets under management, and that's quite a relevant size of crypto assets at the bank. But why? Because we have the appropriate infrastructure behind it. But when it comes to US dollar payments, we still have to rely on the few systematically relevant players, correspondent banks, where we have a correspondent bank account. And we are tied to their opening hours and the opening hours of the real-time gross settlement system of US clearing. So are there any other ways? Are there any alternatives to kind of bypass this old traditional way?
One thing would be stablecoins, and stablecoins have become a big thing, but that doesn't suit everybody's business or everybody's approach to the market. What do you think about stablecoins and how they have developed as an asset?
From the bank's perspective, I see huge opportunities in stablecoin minting and redemption, because then you can become sort of like independent from U.S. clearing. If you accept, and your counterparty also accepts stablecoin payments, then you can technically swap, mint stablecoins, transfer stablecoins on chain, and then the counterparty bank, financial institution redeems it back into fiat. So there's I see there's huge fantasy in it. It's
obviously interesting for Bank Frick. Do you have conversations with other banks in the ecosystem, shall we say Central Europe, Switzerland, and so on, who are also looking towards this, integrating stablecoins that then would facilitate more and more services like this?
Yes. Many players are exploring a lot of alternatives. Stablecoins are one of them, and I believe that because of the deep liquidity of the largest stablecoins, and for example, Circus USDC is also in Europe a regulated financial asset. It's MiCA regulated, which gives it the power to become like a facilitator of trades, or like a means of payment, and a transaction asset. But other players are also evaluating options like I don't know if you're familiar with the fact last year Ripple received ISO 222 certification, which
I think I heard that, yeah.
Which kind of gives them the power to generate payment messages with the same standard as Swift does. So they could potentially integrate themselves in the network of banks where Swift is present, which is essential for US dollar cross-border payments, and seamlessly execute transfers. I think this is one of their main goals, maybe starting in the US, but slowly things are unfolding with their ambitions. And Ripple is not the only blockchain who received ISO 222 payment standard certification from ISO. So there are also there are already multiple competing players to kind of replace Swift, or like provide an alternative to it.
Very interesting. We talk about the dollar space, and that's still big, that's still huge. Then there are euro-denominated stablecoins. You mentioned USDC or EUROC in Europe. How do you think US dollar versus euro and euro stablecoins will develop? You kind of see some development on the horizon in that area?
Yes. Right now, if you're looking at purely crypto transactions, fiat to crypto, and then crypto to fiat swaps, you can see the dollar dominance of around 75% or so. And that comes from the fact that like 44% of all international FX transactions are also in US dollar, or are being executed against US dollar. So it's inherent to the traditional world's kind of proportions of how currencies are working in the trading space, but it's even more dominant. US dollar is even more dominant in the crypto space, where it has 75% in the crypto space. It's a huge number. It's a huge number. And in the traditional space, they are very smaller. And euro as a currency has a 15% weight in international foreign exchange trades. So that would.
Not huge,
not huge, but still in the crypto space they are catching up. Yeah. So right now, micro-regulated stablecoins in Europe. Is there a use case for that? I would rather ask this question. To be honest, when you look at the trading pairs on Kraken or Binance, you will find BTC against euro. You will find Ethereum against euro, but not euro-denominated stablecoins. So that's fiat is on the other side, and on one of the bank accounts in Europe, and not a stablecoin itself. In the decentralized exchange space, in DeFi also, you see like less and less euro-denominated stablecoins, but it doesn't mean that these stablecoins will not catch up. What I'm trying to say is it's not necessarily the use case to kind of replace euro payments in Europe, the traditional ways that we are using. Why? Because it's efficient. To be honest, we have the SEPA payment network or payment standard, and the target to gross settlement network in Europe, which is extremely efficient. Mainland Europe has 2-3 time zones, so there are no huge challenges in settling in Europe, in the eurozone, in euro. Maybe outside of the old continent, the trading counterparties of European countries or of the eurozone countries, there might be like even a larger demand
potential,
for euro-denominated stablecoins than in the old continent itself.
It's an interesting space. We watch that as well, and we see some euro-denominated stablecoins, new ones coming up. We've heard of all Unity. There's this Euro CV from Société Générale. So coins coming backed by rather large players in the space. Perhaps they have more niche use cases that they are building for their own kind of walled garden, closed ecosystem. Is that a possibility as well?
Might be one of those because frankly in payments I see that 55% of transactions in Europe they're conducted with card and not with cash. It would be nice to top it up to 100%, so everyone has instant payments, and 95% of European adults have a bank account. So that means we're well serviced with banks, and most of them conduct transactions quite seamlessly. But then there are still efficiency gains between financial institutions that you can kind of bridge with like a stablecoin and walled garden approaches, as you mentioned, or trading counterparties outside of the European Union to settle, because there comes a problem that Southeast Asian, European trade counterparties, those transactions need to go through like 2-3 correspondent banks to arrive to Europe, and it might take multiple working days. So what you could do is settle in euro-denominated stablecoins.
Very, very interesting. We'll have to see how that develops. I think it probably will move slower than some people think, although at the same time, recently things have moved much faster than we think. So, I mean, speaking more generally, so hard to know. Just as we kind of finish up, we always ask our guests to look into the crystal ball and maybe give us some hints or tips. Is there something that, from your perspective, is developing maybe a little bit under the radar that people aren't talking about yet, but that we should watch out for in the next, say, 3, 6, 9 months? What do you have in mind?
On that time frame, I would recommend to reconsider Bitcoin's main narrative, which is its digital gold. Right now, gold has achieved its new all-time high, while Bitcoin is down like more.
Peter Schiff is having a ball.
Absolutely. And right now, Bitcoin is struggling 20% below its all-time high, latest all-time high, with some side movements. So right now, what we are seeing, I think, on the long run, Bitcoin will gain like more exposure, more adoption, and with it the entire crypto sector now itself. But can Bitcoin kind of preserve its narrative, its main narrative, with its digital gold, or the retail investors will lose faith in it because of the recent price action? On the long run, price action, I think it will follow trends, especially because monetary easing might come. M2 global money supply, and therefore global liquidity is also rising again after many months now. So it will follow, but will the retail mindset follow the trend or refuse Bitcoin as digital gold? As such?
Very interesting. We had a guest some time back who mentioned that this would be the time for a Bitcoin bull run, and it has of course gone up quite a bit, reached a new all-time high, but it doesn't feel like a bull run in the quote-unquote traditional sense. So we'll have to wait and see. Probably you have have hit it on the head with that. Adam, thank you very much for joining RuleMatch Spot On. It's been great to talk about everything with Bank Frick, what you're doing with RuleMatch, and more generally about the market. Look forward to having perhaps a further conversation in the future.
Thank you for having me.